Martin, thanks very much for joining us today.
Thanks for having me, Richard.
As Chief Investment Officer, can you update us on the broad investment strategy and the outlook on the markets globally?
Yeah, very happy to do so. We remain on course with our investment strategy with regard to the quality of the location and the assets. This may not be a spectacular statement to make, but I think long-term reliability and sustainability of our investments is key to our capital sources, which are, as you will know, is predominantly retail orientated. So we have more than 1 million of private individuals who invest and trust us with their savings. So I think long-term sustainable investment is key to us. We have a universe which we define top-down of 28 countries around the world. But if you look at the geopolitical uncertainty which characterizes today's environment, we talk about 2019, this universe is actually shrinking. It's shrinking for, as I mentioned, geopolitical reasons, but also for the artificial interest rate policy which we currently face. We have a huge gap between the Federal Reserve and the European Central Bank, which in a way makes it very difficult to justify US investments at present. We're not going to talk about the events in the United Kingdom today that may have serious implications on whether this huge volume market is going to be difficult for core investors to invest going forward. So overall, it's a shrinking universe. If you want to keep up the quality, it's getting more and more challenging. And we try to get around that challenge by looking into markets which maybe others don't exploit as much as we possibly do.
At Union Investment, you've got a broad range of capital. And is that driving a shift in investment focus to include more niche strategies?
We will not do something fancy. We will not take operational risks on top of real estate risks, which we don't think we can manage properly. I think what I see left, right and center is actually sometimes a bit worrying in terms of how operational risks are being taken on by our peer group and by competitors. What we do, however, is we play on the timeline of investments. We have in 2018 reached a level of 60% of our deals which were forward deals. We think we can, jointly with our counterparties, manage the risk of construction and of the leasing element to this, and to invest today's money in assets which will only be built in maybe 2.5, 3 years time from now is something which we feel comfortable because we can control and manage the construction process with our partners and therefore exercise some control also in the design, so we can actually shape developments the way we want them to be sustainable going forward.
And Union Investment have obviously been invested in the main sectors and then also in hotels, and now you're also moving into student housing, that kind of living area. What's the strategy behind that, and what are some of the challenges and the opportunities?
The strategy is to find markets where we can source assets and deploy the capital which we are entrusted with responsibly. We think that micro-living, to your point, is something which is going to be in more demand going forward as people move more to urban areas where living gets more expensive. And I think new modern forms of residential use is something where demand will lie in the future. So we look into demographics, we look into job growth, and that's something we exploit through the urban living and micro-living investment strategies.
In terms of sectors, office has always been a strong focus for Union Investment, but I've noticed recently in the market smaller deals coming through. Does that mean you're now more open to smaller lot sizes?
That's an interesting observation. We did 36 acquisitions last year, and 25 of these were for assets under 50 million euros. So for the first time, we really wanted to go more granular, which is a lot of work because, I mean, you in terms of our institutional investment process, we spend as much time on a 35 million euro transaction as we would do on a 500 million euro transaction. It's the same due diligence which goes into it. However, we wanted to also help our special funds, our institutional smaller vehicles, to be well served on top of the larger supertankers, as we call them, the flagship retail funds. So we managed to get the right balance of buying large assets but also smaller ones for the smaller funds. And I think this is something we will be going for in the future as well. It is more work, but it's paying out in terms of in a more liquid, smaller range of assets.
And Union Investment obviously based in Germany, and Germany a very hot market, very competitive market at the moment. As Union Investment, do you feel that you get a home advantage in your home market?
Well, we certainly have a large portfolio in our home market, and that home buyers, of course, is something where we try and sort of play to the advantage. I mean, people know us, people know that we are reliable for conducting transactions. If we issue an LOI signed by me personally, we will do the deal. And I think that's worth a lot. We also are repeat offenders, if you like. We do repeat business with developers in forward fundings, because there's no such thing as an easy forward funding deal. To get all the security and the safety nets and helmets and all the equipment sorted, you need to go through a very, very hefty legal due diligence. And if you do this once, you got the t-shirt, but it's so easy then to do a second or third deal. So repeat business is something we do, and that we do most importantly in our home market. So yes, we do have a home advantage. We have a portfolio which is the envy of quite a lot of foreign investors who would like to buy from us. We do sell, but we only sell selectively. We have actually sold in this long cycle between 700 and a billion every year, maybe 1.5 billion when it comes to a portfolio. But now I think we've got a 97% leased portfolio around the world in 400 assets, but mostly in Germany. I think this is a very strong, solid foundation which we built on our international expansion.
And in terms of the outlook for the year, are there specific strategic goals or specific investment strategies that you're going to focus on for 2019?
We are the 12th year into a very long cycle, let's face it. Arguably it's the 10th year, but it's certainly a long cycle, and there's no black swan in sight. This may continue. The European Central Bank will probably keep its interest rates low for a while. People are talking about a super cycle. It takes very long, and there's reference to the Japanese example where interest rates can't be raised. So I think real assets will be in demand for a long time. So there's going to be increasing competition. There's increasing institutional but also non-institutional flight capital coming into Germany as a safe haven, coming into the core markets which are our playing field. So I think it's going to be very difficult to stay on course with our strategy, which I mentioned at the outset, which is selective locations, quality assets. So we will stay on track with that, as I said. We'll be able to exploit more forward funding opportunities. We will grow on the residential side. That's certainly something where we think the granularity of the cash flow, the basic need to have a roof over one's head is something which helps us in having long-term demand for that. We look at retail. We look at retail carefully, both in terms of our own portfolio, how we can keep our shopping centers and retail assets up to date, and how we can exploit the pricing opportunities which are out there, because there comes a point very soon where retail will be underpriced, where people will misprice the risks there, where we can then step in and play to our strength, which is having a reliable, granular source of capital which we can deploy around the world.
Always a pleasure to have you here, Martin, and thanks very much for sharing the strategies of Union and your outlook on the market. Thank you.
It was a pleasure. Thank you, Richard.